Hello everyone, this is Ed from EcclesiaLab.com. In this video, we are going to be backtesting the moving average crossover strategy, and we're going to be using our software, the Ecclesia Lab Backtester. If you are in any way into trading, you may have come across this strategy. It's a classic strategy, it's widely used and talked about. So today we're going to find out the exact figures of performance of this strategy. So I've prepared a chart here just to show you what we're talking about. So you have a fast moving average and a slow moving average. The fast moving average is the smaller period one, so in this case the 50 moving average, and the slow one here is the 200. So the fast one moves a little bit faster, and where they cross is where you're supposed to buy or sell. So here the fast one has crossed above the slow moving average. You would buy here and you would close your sell over here, and wouldn't that be a nice ideal trade? You would have caught this sliver of profit here in the market and took it home. Now in practicality, it's not quite that nice. You can see the problems coming in here when you have multiple crosses above and below, and you're just buying and selling with no real profit, and you're giving money away in fees, to the broker basically. So we're gonna see how this actually performs. I'm gonna show you an example here of just put in a buy, and we'll make it 50 pips stop loss and 50 pips take profit. Now this is roughly, right, it's hard to get it exact, but basically if this sort of buy signal or sell signal has any value, you would expect that when you buy here you would win a higher percentage of the time than you would lose with an even stop loss and take profit. So the first step of the backtest, or the first phase of the backtest, is we're going to test this, right? So first of all, let's just see what we're dealing with here. And by the way, this chart is a 1 hour chart, and for the backtest I'm going to use a 5-minute, and I'll multiply the figures by 12, so I'll get the 1 hour equivalent. So over here we're setting a 1200 and a 4800 SMAs, and the reason for that, it's basically the equivalent of the 1 hour. But we're using the 5-minute chart. We're using that small granularity for the accuracy of the calculations, and we're gonna do, let's see here, we have 20. Well, we'll maybe do the start of 2020 to the end of 2020. So we have one full year, we have euro dollar, and basically operating within a 1 hour kind of period of reference, if you will. So these are the conditions. So if the 50 SMA crosses above the 200 SMA, and if there are no buy orders open, then we open a buy order, take profit 50 pips, and stop loss 50 pips. So even stop loss and take profit. And I've commented out some code here that will be for the second phase of the backtest. And again, vice versa for the sells. If it crosses below, you sell with an even stop loss and take profit, and that's only if there is no other sells open. So those are the rules. Of course, if I didn't have the condition, for no previous orders, sells or buys open, then it would just buy infinitely and you would go broke very fast. So I'm gonna run this here, and this will take a while, so we'll pause the video here and we'll come back with the results and have a look. Okay, we're back, and the backtest has completed, so let's take a look at the results. So here is the profit chart. So here we have a breakdown of the long and the short profits, and the bottom one is just both of them summed together. So not great, not very good at all. Basically the same sort of thing you would expect from buying at random, and you will find a lot of strategies are like this, where when you actually test them, it's about as good as buying at random. and the statistics here, I'm sure, reflect that. So we have 178 wins and 160 losses. So you would, it's about 50-50. This is over a year, and again, the total trades were 339 over this period of a year, and the percentage win rate, let's see here, percentage win rate is 47.2%. So if it was the other way around, someone might argue that this strategy is profitable, but again, if you backtest it over multiple years, you might actually find that it evens out exactly to 50%. Alright, so that is the statistics for doing this, right, for having an even stop loss and take profit. What if you did it actually, you know, in the way that is theorized, where you would buy here and you would sell here? So we'll do that as the next phase of the backtest. So I'm going to comment in these lines of code here. So this condition here says if there are open sell orders and the average crosses above the slow moving average, then you would sell all your sell orders, right? So you're going into bullish mode, you sell off all your sells, or you close all your sells, and then you open a buy. And over here, what we'll do as well is we'll just make the stop loss and take profit, you know, 1,000 pips. Very unlikely that you'll ever hit 1,000 pips. So it'll basically be operating on the basis of, you know, open here and close here and open here and close here. So you would buy here, close your buy here, you would short here, you'd close your short here. So you will be operating here according to the theory of this strategy. So let's do 1,000 pips here as well, and 1,000 pips here. All right, so we are ready for the next phase. I'm going to just make sure everything is okay here. Yep, it looks good, so I'm gonna hit run. And we're gonna come back again when this is done, and we're going to see the results. All right, we're back again. The backtest has concluded again. So let's have a look at the results this time. And it looks strikingly similar to before, but I would expect the statistics to look a little bit different. I would imagine the average hold time is a little bit longer, and so probably there might be less trades in total. Yeah, in fact, we only had a total of 22 trades for the entire year, since you spend a lot of time holding them. But the performance is still not very good. The average loss is actually a little bit smaller than the average profit. And the win rate percentage over here, where was it again? Win rate. Well, we can see here we had 5 wins and we had 16 losses. So this strategy seems to be maximizing the wins. It lets the winners run on, which is a good thing, but it just makes far too many losses. So in total, not very good. And I'm just trying to find the win rate percentage here again. For some reason I can't find it. I should probably use control. Yeah, I'm just blind. It's the very last stat over here. So 22% is the win rate when you're operating like this. So I don't know if you found a way to perhaps filter out these sort of messy areas where you're just losing most of the time. If you found a way to not take trades there, or to identify when you're in this sort of market condition, this may actually work somewhat. But as it stands right now, you can see the win rate is not good, the strategy itself is not profitable, and it also has no real predictability, as we demonstrated with the first phase of the backtest. There's no real predictability there. The win rate is 50-50 if you're operating with an even stop loss or take profit. So we're gonna leave it here for now. Let me know what other backtests you would like to see. Would you like to see this one perhaps explored it a little more, or would you like to see another strategy? So subscribe, there's plenty of more content coming, so please subscribe and hit the bell, and I'll see you next time.